on the CME trading floor, and we are going to have a quick look at Tesla, whose earnings are coming up. What option plays can you do there with our Leviathan option decision-making engine behind you? Well, now let's just go here first of all. As you can see here, chart's not very helpful. Along with the rest of the market, the market is currently treading water. We're waiting to get direction out of the Fed for an overall move in interest rates, and as to how much the effect of this war is going to affect the economy and therefore other things going forward. So where we're trading now, I'm going to show you two trades, one bullish, one bearish, just to give you an example, and also how that system works. So basically going through about 1 billion iterations. And so I'm going to start off with an upside trade, targeting 450 by the end of the year. Again, we keep repeating this. We focus on lower risk trades for you. We run through, the system runs through 1 billion iterations to come up with the best risk reward trade. And we are not looking to capture the day move. We're looking to capture the trend that occurs off the back of the earnings report. So, you're still going to see good returns. You can still see good returns very immediately in some of these things, but we are focused on keeping you in the game and you're not doing your ass, basically. So, with that in mind, what are the best risk reward trades? We have trade scores here that list them from 0 to 100 of its confidence based on various metrics. But it likes call spreads. I like call spreads generally. They monetize very quickly, and they can earn you. You're not worried about specific targets. When we do call or put flies, the chance is that you're aiming for an area, but if you overshoot, you're going to start losing money on that targeted trade as well. Whereas call spreads, you'll go up. Yes, there's a maximum amount you can make out of it, but even if it goes blowing past your target price and we end up at like 500, you're still making your money on this trade. And so even though you're targeting 450, it quite likes this one here, the 410, 435 call spread, getting in at $7.25, give or take. We add in the costs as well there when it looks at it. Here would be your detailed report and your legs and how much your Greeks are, what the Theo is, and what your heat map would look like in different regular vol, high vol, low vol. And you can see here, you obviously trying to get more green than red. We can download that to have a better look at it. But yes, the idea is that these trades, hang on, let me just drag this one over here. Right, anyway. As you can see here from this heat map, the idea is more green than blue. And also that on the upside here, you can see that you monetize pretty quickly. So even though, it's a longer dated trade, you're going to make enough money on this if you want to flip it pretty much straight away with a fairly minimal risk. Look, you don't lose that much if we go down, but you clock in if we go up. And obviously, if you hold it all the way, you can make some very good money out of that. However, we tend to look at trades to get out in the like 6 days, between 11 to 6 days to go, because that's more realistic. Even if you're making this kind of money, unless you have absolute confidence that we're not going to turn around and go back down again, you could hold it all the way. But that's kind of how we evaluate, or how the system evaluates trades of a more realistic scenario where you are getting out sooner than the expiration, which is what most other people show you. So anyway, yeah, upside for a 450 target by the end of the year, the 410.35 call spread in December. And then looking at a downside trade, equally the same amount down, going to 300. Where would you see for that? So the system actually kind of likes you to say, if you want to have an okay chance of this being in the money, and you're strong with your conviction, just buy a put. It likes some of these puts. The 345 put, it likes the best, but bear in mind you can only do 3 contracts of this per $1,000, because you're looking at getting in around $30. But it's looking at it, and it kind of likes outright puts. If you want to go more complex, though, there are other strategies that will earn you even a better return and are cheaper to get in, like this ratio put fly here: 265, 290, 335, 1 by 5 by 5. And it likes this. It has a great ROI, thinks you have a better chance of making money on this trade, and you're getting in at $3.24. However, what we're going to do is we're going to have a look at what the heat map looks like. Now, it likes it, but as you can see here, there's a little bit of risk here. You go down a lot, go down too much to this area here, and you won't do very well. And you're really coming up to expiration, targeting that area. It works great on a shorter term move. So if you're kind of like looking at it at a shorter dated area, but you want to target there, this is a pretty good trade, because you can see here, if we absolutely puke out of sight, the premium that you have for the puts are going to kick in. So this is a really good shorter term trade, that ratio put fly 1 by 5 by 5. However, you do go down there, you need to look to get out of it, because if you sit on your lower strike, that's going to cost you a lot of money on the bottom right corner, as you see here. But overall, looking at how it looks, overall, your upside, as you can see here, your downside rather, if you're wrong, is fairly limited. So as you can see here, you don't lose much at all. And if you're wrong, you can just flip out of it, lose a couple of cents on it. But if you're right and you go down to 300, you're making money immediately on that, which is why the system particularly likes that trade. I'm going to go back and just have a quick look at the more exotic trades here for the upside. If you are so inclined and you like the target, this ratio condor here, 2 by 2 by 5 by 6, you can only do 19 contracts of that. Your $2.60 entry fee. And let's have a look at the report on that one. So again, it monetizes really well quickly. It likes this trade here, but this is again more of a shorter term trade. If you're going to do this ratio, it works a lot better there. Or if you're convinced that that is the right target area that you want to get to, because as you can see here, over time, it monetizes well if you're in the area that you are targeting, i.e. around 450, but not so good if we're above 500, and you got the risk here top right, which you want to try and avoid. But as you can see here, short term, that's exactly where you want it to go to. So the dynamic part of option trading is that you can have a trade that will be good short term, bad long term, and vice versa. But this one is a good ratio trade for a short term play, or unless you actually have a specific target in mind that you want to reach. And that one, as you can see here, will give you a massive return of over close to 750%. And the system itself quite likes that. That's his kind of favorite trade. And they're all kind of different ratios here. I can go through these with you upon request. Please hit me up. But otherwise, these are the nice simplistic trades you have for Tesla. So, just to recap, downside plays. Either just buy some outright puts if you don't mind paying out the cash, or failing that, target this fly here to 82.95, 310 fly at $1. You can get 98 of those there and flipping out at 455. That's more specific targeting an area there. Or if you like more shorter term plays, this trade here, 265, 290, 335 put fly, but ratio 1 by 5 by 5. That one will work good for you short term. And then recapping for the upside, targeting 450 by year end, 410, 435 call spread. I like that trade. It is quite expensive, $7.32. You only get 13 contracts of those. Or failing that, this ratio condor 2 by 2 by 5 by 6. The 405, 450, 465, 510 call condor with that ratio. You can do 19 contracts of that at $2.60. That one monetizes very quickly in a sharp upside move. And so that's what we have for you on Tesla. So as always, say to you, rather be lucky than be good. So good luck trading and have a great day.